region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, December 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a half at 442 3/4. January soybeans were up 3 3/4 at 1053 1/4. And March Chicago wheat was up a penny and a half at 514 1/2. We had a couple export sales announcements here this morning. 136,000 metric tons of soybeans were sold to China for 25. Also announced 231,000 metric tons of soybeans to unknown destinations, also for 25. Guess what we know here this morning? We're coming into first notice day for January contracts. We got year end, starting to see kind of a drawdown in volume here. It's becoming pretty quiet. But one thing I did want to point out, Dustin, as we kick off here this morning, you got March corn, kind of in a pretty interesting technical area there, hovering around the 50-day. And it's kind of interesting as we're in holiday markets, things get a little bit thinner, how some of these programs and traders alike, look at these technicals. So maybe share a little insight there, and then we'll throw around the room.
Yeah, Dan. Well, it does feel like momentum is everything for how the managed money will trade. So you start to roll over momentum to the downside. I think that just adds fuel to the fire for the recent shorts that they've started to build again. So yesterday's sell-off was quite substantial. I still think that there's been it's been kind of surprising to me, like with just looking at the balance sheet and seeing how corn has responded over the last 2 to 3 months. It's been pretty supported on every break. So in really anytime we've gotten below some of these major moving averages in recent history, it hasn't paid to try to chase that down and sell below these major moving averages, because that's been a buy point. I do think though, whatever it was yesterday that we tripped, we started to see that ratio of the beans divided by corn ratio rise again. We saw oil share rise again. That's kind of more naturally what I would think is the play here for managed money. That right now they're currently, from what we know, they're quite long beans still, and they're starting to build a corn short again. And if you just look at the 290 million bushel carryout projection for the WASDE report for beans, and the 2 billion bushel carryout projection WASDE report for corn, there's a tightness to beans on the carryout level. It certainly doesn't feel that way in basis, but on the carryout level, that could show up. Whereas we've got to get pretty creative to get corn to be tight, unless we've just completely missed the yield. So we got to some high ratios when we thought China was going to buy a bunch of beans. Then the wind was kind of out of their sails. But look at today, we're still getting these trickle in sales. China is in the market for beans now, and the grower, which I think needed to raise a lot of cash this year and going into the new year, I think did unload a lot of beans, is my guess what happened to raise cash. And now is it corn's turn is the question. Is there a wall of corn that's going to come out of the north and start to weigh on that supply chain, where we have some, what's really been the case the last 3 years in a row. If you just look at the progression of the price into August, the lows of the year for the September contract have happened in August for the entire marketing year. And why is that? Is it because we miscalculated something, or is it because we're storing a lot more and not selling it all at harvest? I'm gonna a little bit patient, wanting to see where we go after these Jan 12th reports, because we may be missing something on total production too. We need more information really about the crop before we can really say that.
Yeah, very good. Brad, you still seeing pushes in cash markets here as we go into the first of the year? Guys trying to source stuff, get everything bought.
Yeah, for sure. Like we talked in the previous shows here, some elevators getting pretty aggressive. I was getting some, as Ryland was calling last week, the Santa rally that we saw in the market here, where guys were getting, 450 cash. And then areas that, basis isn't well, we've got kind of started to think outside the box a little bit, where you can lock up trucking at a favorable level. You can move it to some areas that you don't normally go to. So, even like 100 miles away, you're getting maybe some option bases, which makes sense compared to your local basis. And then the river still remains strong. Just looking at the St. Louis market, you're getting like 20 over corn, 30 over bean. So, give us a call. If you guys are looking, guys are going to need cash sooner than later. So we can start hitting the register at 450 cash for you. I think that makes sense for a lot of growers.
Oh, very good. Ryland, we were talking before the show. I mean, I think we've definitely hit the holiday button for cattle. There's nothing. It's two-sided, choppy trade. Hogs is just nobody's interested. So enlighten us here this morning.
Yeah, I mean, sideways is a really good way to put it. Just seems like overall, you do have some optimism here, but on the other hand, we're just kind of consolidating, just kind of building some energy, it feels like. And obviously these sideway markets kind of make everybody a little antsy, but we're just not seeing a mad dash to do too much right now, just kind of on either front. Packers look like they're going to be buying for a full week next week, able to get everything last week pretty much steady. So we'll see if they're a little bit more aggressive. It just, at this point, seeing kind of a mixed trade in the beef. Choice 349.33 down $1.88, select 345.62 up 182. So just kind of mixed trade there as well. I mean, all in all, holiday volume has still been pretty light, pretty much across the board here. We did see a little bit of liquidation kind of trade late in the on the live side of things, but overall feeders still kind of climbing to new highs here. We did have a new high for the move. I mean, the index is still really strong. Cash markets are strong. Obviously, some auction markets are closed until next week, so you're just not getting a full scope of the data. Plus, it's just kind of that you're in holiday mode around there too. So I think once we get through this week into the new year, we're going to get just probably a lot more interest. And overall, the market still seems pretty confident that prices can go higher. Our feeder market is trending that way. We're above the 100-day moving average, using that as support. And I think that's really kind of keeping the live side up as well, just from a speculative standpoint. So we'll see how cash goes. Looks like I think they're just in general kind of expecting steady. Could see a little bit of mixed trade up in the north, but generally steady is what we're calling it for right now. And the hog side of things, just once again, still stuck kind of between the 50-day and the 100-day since the hog and pig report. Haven't been able to retest last week's breakout high. So would like to see that, but we'd still like to see a little bit more support here, I think, on the carcass side before we get too excited. Carcass was down $1.75 at 95.96. Belly's down 450, so they're taking off that big jump that they saw at the end of last week. But we are seeing a lot more interest in the back end of the market. We talked to some producers last week mentioning that disease was starting to kind of creep into some of their facilities. So we are seeing a little bit more support in the June, July, August on back pretty much. I mean, you made new contract highs July on back. You're only $1.65 away from contract highs. So there's some good opportunities in the summer here on the hog side of things. And the story is starting to get maybe a little bit more kind of word of mouth supportive, but overall that hog and pig report is still kind of looming. So I think we just kind of hit that point where nobody wants to jump in front of it before the end of the year. So we'll see.
Very good. Appreciate the update there. Guys, one thing to note, okay, we will have a full market tomorrow on New Year's Eve. We will be closed Thursday, and then it'll be a hard reopen Friday morning at 8:30 Central, followed by a full market 1:20 Central close there on Friday. So that's a little different than Christmas, but still tomorrow we will have full markets. Also tomorrow morning we will have a weekly export sales report. It'll be out at 7:30 Central. That'll get us through December 18th. So we've got 2 more reports after that, and then we will be fully caught up on the weekly export sales side, which is good. We finally made it to there. So with that, we'll wrap. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. I appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.